Welcome, curious minds. Get ready, because today we're diving headfirst into something really transformative, an explosive revolution that's actually already happening in global finance. We're going to unpack the frankly, astonishing growth of the blockchain and banking market. When I first saw the numbers from the source we're looking at today, the blockchain revolution in global banking, they genuinely made me stop and just take a breath. We really are talking about unprecedented growth here. It paints a picture that, well, it changes everything about how we might think about money.
Absolutely. And our mission for this deep dive is pretty clear. We want to pull out the most important bits of knowledge from this source for you. We'll be exploring, what's really driving this rapid transformation, where it's actually taking hold around the world, and crucially, what this huge shift could mean for your money and really the future of finance itself.
Yeah, exactly. And this isn't just some abstract tech concept floating around out there. This is about the fundamental plumbing of global finance, how your money moves, how transactions get secured, how the entire financial ecosystem is being, well, basically redefined. It's impacting you right now, probably more than you realize. Okay, let's get into the numbers because they really are eye-opening. So the global blockchain and banking market back in 2021, it was valued at what, 2,232.59 million. Significant, right?
Definitely significant already.
But then just 4 years later, by 2025, that figure jumped to $7,070.2 million.
It's a big leap in a short time.
But here's where it gets really interesting. The projection for 2033. It's expected to skyrocket. We're talking a remarkable 70,905.2 million.
70 billion.
70 billion. That's a compound annual growth rate, a CAGR, of 33.4%. I mean, that's not just growth. It feels more like an explosion.
It really does. And what's so fascinating here is just how fast this tech is moving.
Yeah.
From being mostly a concept, maybe some pilot projects, to now clearly mainstream adoption at this kind of scale. Numbers like these, they aren't just stats on a page. They signal a profound fundamental shift. It tells us blockchain's moving way beyond niche uses. It's embedding itself right into the core of how the global financial system is going to work, aiming for, greater stability, faster evolution. It's almost like finance found its next big upgrade.
Right. So what's actually fueling this? What's powering this engine? It can't just be the technology itself. Our source points to it being a direct response to some major challenges and demands facing finance today. So what are the primary catalysts identified? What's driving this boom?
Well, okay, at a basic level, you've got the increasing adoption of decentralized finance, DeFi. That's one big piece. Then there are obviously enhanced security requirements. That's always a huge deal in banking. And finally, this kind of relentless push for truly transparent ways of handling transactions within that global banking infrastructure. And these aren't just like minor tweaks. They go right to the heart of critical, long-standing issues in traditional banking.
And if you dig into those issues a bit more, you see other things driving demand, right? Like the need for much faster settlements for transactions, robust fraud prevention, that's huge. The dream of, real-time cross-border payments finally becoming a reality, and the efficiency you can get from automating things with smart contracts. So how does blockchain tackle these things in a way that maybe older systems just couldn't?
Yeah, that's a really important question. Why is blockchain seen as the answer here? Let's take smart contracts. Just imagine, okay, a digital agreement. It executes itself automatically when certain conditions are met. So maybe it releases a payment, the second goods are confirmed as delivered, no human needed, no middleman.
Right, cuts out the delays.
Exactly. Delays, potential for human error. That's the power of smart contracts in banking. And when we talk about fraud prevention, it comes down to the nature of the ledger distributed, immutable. Once a transaction's on the blockchain, changing it or deleting it is, well, practically impossible.
Creates a much stronger audit trail.
Precisely. Much more resilient to fraud than old-style centralized databases.
Yeah.
And DeFi, that's about cutting out the middleman, disintermediation, potentially lower fees, faster processing for certain services. So it's pretty clear that this big institutional push for transparency, security, efficiency, it finds a really compelling solution in blockchain, almost tailor-made.
Yeah, that focus on fraud prevention really stands out. It shows it's not just about going faster, but about building something fundamentally more secure, right?
Exactly.
Okay, so let's zoom out a bit. Let's look at the global picture. Given these drivers, where is this revolution hitting hardest? Where is it taking hold most strongly? And, what does this mean for you listening, whether you happen to be in North America or, say, Africa?
Okay, maybe not surprisingly, North America is leading the charge here. The market is really impressive. It grew from about $850 million back in 2021 to a projected 26,072.2 million by 2033. That's maintaining a strong 33.1% CAGR.
Yeah, and that dominance isn't just about, the overall size of the economy. Within North America, the U.S. is definitely the biggest contributor. Seems to be driven by a really strong fintech adoption culture. There are lots of enterprise blockchain integrations happening. But what's also interesting is seeing Canada and Mexico growing so fast, too.
Right. Canada's CAGR is projected even higher at 34.3%. Exactly. Which tells you it's not purely a U.S. story.
Yeah.
There's a broader regional embrace going on. Maybe cross-border trade is a factor, shared tech infrastructure, things like that.
Okay, so North America is clearly huge, but it's definitely not just happening there. Let's shift across the Atlantic now, look at Europe. A similar story, rapid expansion, but maybe with its own flavor. Europe's market is also expanding dramatically. It started at $678 million or so in 2021, expected to hit 21,016.8 million by 2033. That's a 33.2% CAGR, very close to North America's rate.
You're absolutely right. The numbers point to a real continental shift happening.
Huh?
The UK is, interestingly, leading the way in Europe with the highest CAGR, 34.4%.
Oh, okay.
Suggests a really significant commitment there to using blockchain in their financial infrastructure. It's not just the UK. Germany and France are obviously major players too. And you see robust growth in Italy, Russia, Sweden. Even smaller but very developed financial centers like Luxembourg. They've got a 31.3% CAGR. And that's sort of catch-all rest of Europe category.
Yeah.
That's growing at an even faster 35.7% CAGR.
Wow.
Yeah, it really shows just how widespread the adoption is becoming across the entire continent.
Okay, let's keep moving east. Asia Pacific. This region is also seeing, truly substantial growth. It's on track to go from around $430 million in 2021 to a projected $14,503.2 million by 2033. That's a 34.0% CAGR.
Indeed. And, perhaps predictably, China leads the region in overall market size, projected $6 billion by 2033. But here's a standout. India. India actually has the highest TAGR in the entire Asia-Pacific region, 34.9%.
Higher than China's.
In terms of growth rate, yes. It suggests a really rapid, maybe even aggressive embrace of the technology there. Could be driven by, a huge, young, digitally savvy population, plus government pushes for digital payments.
Makes sense.
And we're also seeing Japan, South Korea, Australia, Singapore, all projected to exceed $1 billion by 2033. And then there's Taiwan. Kind of a dark horse, maybe. It actually has the highest overall CAGR we've seen anywhere so far.
Get out! Really?
Yeah, 38.1%, which points towards a really concentrated, super fast adoption happening there. Projected around $406 million by 2033, but growing incredibly quickly.
Fascinating. Okay, but this isn't just a story about the traditional economic giants, is it? We're also seeing really rapid acceleration in what you might call emerging high-growth regions. South America, for example, revenue there projected to hit nearly $3 billion, $2,907 million by 2033. Brazil's leading the way.
And the Middle East, too, gaining serious traction. Expected market size around $3,088 million by 2033. Saudi Arabia is the front runner there, regionally speaking,
Right.
likely pushed by those big national digital transformation plans diversifying the economy.
Right, Vision 2030 and all that.
Exactly. And the UAE and Turkey are falling close behind. Shows a real regional commitment.
And finally, Africa. Emerging as a really critical high-growth area, the market there is projected to grow to over $3.3 billion, $3,317 million by 2033. Nigeria and South Africa look particularly noteworthy in the data. Nigeria projected at nearly $1.5 billion itself.
Yeah, almost $1.5 billion for Nigeria, South Africa, over $900 million.
So it's crystal clear from all these numbers, doesn't matter where you look on the map. This isn't just happening in one or two places. It's genuinely a global financial reengineering underway.
You've really hit the nail on the head there. This extraordinary expansion, it's truly a worldwide trend.
Yeah.
Driven by these universal needs, right? More efficiency, better security, more transparency in finance. It really underlines how this technology seems to address fundamental needs across all sorts of different economies and regulatory setups.
Okay, so just to quickly recap our deep dive then, the numbers we've gone through today, they absolutely reinforce this idea. Blockchain isn't just making small changes, it's actively redefining the entire global financial ecosystem. It's almost like finance is getting a whole new operating system.
I think that's a great way to put it. It really is. And those big themes, transparency, security, efficiency, they're not just buzzwords anymore. They are the fundamental forces driving this global shift. Financial institutions everywhere seem to be concluding that blockchain is, kind of indispensable now for tackling current problems and grabbing future opportunities.
Right.
Which leaves us, and you, with a final provocative thought to maybe chew on. Given these absolutely explosive growth numbers and the really widespread adoption we're seeing continent by continent, what everyday banking things, paying bills, sending money overseas to family, getting a loan, what might be radically different for you in just the next 5, maybe 10 years.
Yeah, and that brings up an even deeper question, perhaps. As blockchain keeps climbing so rapidly, how will the basic mechanisms of trust and finance actually change? Especially when transactions become immutable, decentralized. What does that really mean for your own economic future in a world that's clearly becoming more transparent, more efficient, and way more interconnected? Welcome back to the Deep Dive. Today, we're digging into something that's been making waves for a while now, but feels like it's really hitting its stride: blockchain in the banking world. Our goal here really is to unpack how this tech is actually starting to, reshape things. Where are the real opportunities? What are the roadblocks? And maybe most importantly, what's coming next?
Yeah, and we're grounding this whole discussion in a pretty thorough analysis from Cognitive Market Research. Their report, Blockchain and Banking, Opportunities and Challenges, gives us a really solid base.
Okay, great. So let's jump right in. I mean, you think about banks, they're usually seen as, well, pretty traditional, maybe cautious institutions. So the big question is, why blockchain and why now? It feels like a shift. What's really pushing them towards this technology? Is it just security? Because they've always needed security.
Right. It's more than just general security. It's a mix of things, really. Banks have been dealing with, let's be honest, some clunky old systems, security worries, tough compliance rules for ages. What's changing is blockchain tech itself is getting more mature, more enterprise ready. Plus, the cost of fraud and just meeting regulations keeps going up. And, there's pressure from these newer, nimbler fintech companies who are already using it.
Okay, so it's a combination of the tech getting better and the old ways
Yeah,
getting harder.
exactly. And let's talk about that enhanced security and compliance piece first. It's not just tamper-proof in an abstract way. Think about it like this. Normally, you trust the bank, right? An intermediary. Blockchain moves towards what you might call cryptographic trust. The system itself proves things are legit. It's decentralized, it's immutable, meaning once a transaction's logged, it's basically set in stone. You can't go back and secretly change it. Imagine doing an audit where every single step is cryptographically locked. It could slash audit times, make fraud detection much faster. It builds trust right into the system's core.
Okay, that makes sense. And thinking about everyday banking frustrations, international money transfers, anyone who's done that knows it can be slow, kind of opaque, lots of fees. How does blockchain help there?
Yeah, that's a huge one. Cross-border payments. The old way involves messages bouncing between multiple banks, correspondent banks they call them. Each step adds time, adds cost. Blockchain can potentially allow for settlements almost instantly or much, much faster anyway. And because it can cut out some of those middle steps, the operational costs can drop significantly.
Fewer cooks in the kitchen, basically.
Pretty much. And that appeals not just to the big banks wanting to save money, but also these fintechs trying to offer a better, cheaper service. It levels the playing field a bit.
Yeah.
And there's another big area, identity management. You know how every time you sign up for something financial, you have to prove who you are all over again?
Oh, yeah. Uploading the same documents again and again.
Right. Massive duplication of effort, costs a fortune for the banks, creates these data silos. Blockchain offers a way to do secure, encrypted identity checks, think Know Your Customer or KYC. It could allow sharing that verified data between institutions, securely, of course. That speeds up getting new customers onboarded, cuts down on all that duplicated work, and helps fight fraud, too. It's about building a shared, verifiable digital identity system.
So, better security, faster payments, cheaper operations, smoother identity checks. These are solving real, long-standing headaches for banks and, frankly, for us as customers, too. But, okay, if it sounds that good, it can't be simple. Implementing something this fundamental must come with some serious challenges, right? What are the big hurdles banks are facing?
Absolutely. It's definitely not a walk in the park. The Cognitive Market Research report points out some key restraints. Number one is probably regulatory uncertainty. The rules around digital currencies, around distributed ledgers, they're still being written, and they're different all over the world. It's patchy.
So banks are worried about stepping on a legal landmine.
Essentially, yes. They hate uncertainty. They need clear rules of the road before they invest heavily. They worry about compliance risks, about unclear enforcement. It makes them cautious.
Okay, regulation is a big one. What about the nuts and bolts of actually doing it? Is it technically difficult? Expensive.
Both. That leads right into this second major hurdle. The sheer cost and complexity of actually deploying this stuff. You've got banks running on IT systems that are sometimes decades old, these core legacy
Right,
systems.
trying to plug something brand new into something really old.
Exactly. Integrating blockchain architecture with that existing infrastructure is, well, it's really hard. It means big investments in new tech, lots of staff training, changing how whole departments work. It's a major operational shift, not just a software update.
So a massive undertaking, really.
Definitely. And then there are the technical limitations we still need to talk about. For instance, scalability. Some public blockchains, the big famous ones, can sometimes struggle to handle the sheer volume of transactions a bank needs, especially at high speeds.
Like trying to push too much water through too small a pipe.
Kind of. Now, it's important to say that private or permissioned blockchains are being designed specifically for these enterprise uses, and things like Layer 2 solutions are emerging to help speed things up. But it's still a consideration. And another technical point is energy efficiency. Some blockchain consensus mechanisms, the way everyone agrees a transaction is valid, can use a lot of electricity. That raises sustainability questions, which is becoming a much bigger deal for banks and their investors.
Right, the environmental impact.
So you add all that up, the regulatory fog, the cost and difficulty of integration, the technical speed bumps and energy use. It means banks need very careful planning and, frankly, deep pockets to make this work. It requires significant ongoing investment.
Okay, so the path is definitely challenging. But let's pivot now towards the future. Despite these hurdles, there must be some exciting developments happening. What trends are really shaping where blockchain and banking is heading next?
Yeah, this is where it gets really forward-looking and potentially quite disruptive.
Hmm.
One huge trend is the whole area of central bank digital currencies, CBDCs, and also the idea of tokenized financial assets. Central banks around the world and big financial institutions, too, are seriously exploring these. They're looking at whether digital currencies could make monetary policy work better, maybe, but also how they could open up the financial system to more people.
Like people in regions without many physical bank branches.
Exactly. Particularly in underbanked areas, if you have a smartphone, maybe you could access central bank money directly, potentially. It could broaden financial inclusion significantly.
Wow, okay. So a digital dollar or euro or whatever issued right by the central bank, that sounds like it could really shake things up for commercial banks too.
It absolutely could, and that's a whole debate in itself. But it's happening alongside another key trend that involves commercial banks directly: banking consortiums. We're seeing groups of banks actually teaming up, collaborating on shared blockchain platforms. They're doing this for things that happen between banks, like settling trades, clearing payments, managing trade finance documentation.
So competitors working together on the plumbing, basically.
That's a good way to put it. They pool resources, share the costs, share the risks, and try to streamline those complex interbank processes together. It fosters innovation, but in a more controlled, collective way.
Interesting. And there's one more term that always comes up. Smart contracts.
Yeah.
How do they fit into this future picture for banking?
Smart contracts, yes. They are really key to automating things. Think of them as self-executing contracts where the terms of the agreement are written directly into code. So for things like lending agreements, escrow services, settling derivatives, complex transactions, smart contracts can automate the steps, reduce the need for manual checks and interventions.
So faster, potentially fewer errors, more efficient.
Exactly. It improves efficiency, speeds things up, and makes the whole process more transparent and reliable because the rules are baked into the code. And, when you look at these three things together, CBDCs potentially changing access to money, consortiums rebuilding interbank infrastructure, and smart contracts automating complex deals, you start to see the outlines of a really different global banking system, potentially more decentralized, more transparent, and certainly more agile.
Right. So just to kind of wrap up our deep dive here, blockchain clearly offers some massive potential wins for banking. We talked about that cryptographic security, the efficiency gains in things like cross-border payments, streamlining identity, huge upsides. But it's not easy. There are real hurdles. The regulations are still catching up. Integrating with old systems is expensive and complex, and there are still technical questions around things like speed and energy use. Yet the future trends are really compelling. Central banks getting into digital currencies, banks collaborating on shared platforms, smart contracts, automating everything. These aren't just abstract ideas anymore. These shifts are happening, and they will eventually change how you interact with your money, how financial services work for you every day.
And that leaves us with a pretty interesting question for you, the listener, to think about. As we see more banks joining these consortiums and as central banks move forward with digital currencies, How is that going to change the game for the traditional banks we know today? What does that competitive landscape look like in, say, 5 or 10 years? And maybe more personally, what new kinds of financial opportunities might open up for individuals like you in a financial world that's becoming potentially much more agile and transparent thanks to this technology?